Thank you so much for joining me this morning, and thank you to our audience for joining us bright and early. Now, I don't usually ask my panelists the same question, but I want to do a rapid fire round just to wake everybody up, just to get us fired up. So I'll come to all of you with a question, and Gabriella, I'll start with you. So when you hear the phrase AI in finance, what's the first word that comes to mind? Is it opportunity, risk, hype, or something else? And can you tell me why in a quick response?
Sure. When I think of AI and what it holds in terms of potential, I look at the potential for transformation. And I see it very similarly to how we saw the advent of the internet, the ability to transform whole industries and to provide new opportunities for people.
Fantastic. Yes, sir.
I definitely think of the word opportunity, because now these advanced technologies like AI are quite democratized. Even my children have access to AI. So opportunity for everyone.
Fantastic. And Mohamed?
Yeah, good morning, everybody, and thanks for having me here. And I agree with my colleagues. Opportunity is probably the word that comes to mind first. There's definitely hype. Every startup with a spreadsheet and a chatbot, puts the tagline of AI powered. And there's definitely risks also involved, both operationally, reputationally as well. But
that's a lot of words, Mohamed.
but absolutely, opportunity is the one that comes to mind.
Wonderful. Transformation and opportunity. Again, a great deal of optimism around the technology, but as I always say, with the right guardrails in place, then we have the right opportunity. And I want to unpack a lot of that. Mohamed, I want to get to the crux of the issue. And we do a lot of research within the Policy and Insights team on return on investment. How do you define return on investment? How do you measure the success of these AI projects within the business? And Mohamed, I'd love your thoughts on that. How are businesses defining success?
Absolutely. I mean, we're seeing now trends moving away from, metrics like how many models do we have implemented? Do we have a chatbot? And gravitating towards metrics that actually contribute to the business success. One topic close to my heart is the impact on customer. Are we making the experience better? Are we making interactions faster, more intelligent, more personalized? If we're able to predict the customer's need before they ask, then we're on the right track. And the second aspect is operational efficiency. Can we do more with less? Are we able to measure the cost savings and the time savings of an initiative? These are the kind of questions that we should ask. And the last part is strategic agility. How could we go to market faster? Are we able to react to market changes and conditions faster? Are we able to react to regulatory changes faster? So these are the type of questions that organizations should ask themselves to actually measure the success of implementation of AI initiative or strategy.
Fantastic. And I think you touched on two facets of the ROI discussion. One is efficiency and cost savings and, the cost savings conversation. But then there's also a value creation component of ROI. And you touched on that with the customer perspective that you just shared. Gabriella, I'd like you to build on that a little bit, but also now bring it to the fintech or the financial services context. We've got fintechs, many of them who are AI natives, but also more traditional financial firms that are now adopting AI. Who's got the edge?
So I think in the beginning, you're going to see the edge held very heavily by emerging fintechs, right? Because they'll be able to adopt and implement this technology more nimbly. They will have staff that more likely is more digitally native, is more comfortable with leveraging the technology. And because there may not be, bureaucratic processes or procedures, these firms will in many cases have the edge in the beginning. I think over time, what you'll see is that those firms that know how to appropriately really allow for the integration of technology to provide governance and guardrails, who have existing systems, processes, and procedures, that they'll be able to better leverage that for like longer term growth and evolution. And so I think, everyone wins with AI. It will just be determined in part by how open those firms are to really upskilling staff, creating guardrails, and then supporting it from a very intentional perspective to drive growth over the longer term.
So do you think even traditional financial firms could be at par with fintech soon enough?
If there is willingness and leadership, tone at the top is very important when we talk about organizational transformation. And then I think, strong internal investment in supporting the development of those systems and really taking them seriously.
Absolutely. And that's the part of the J curve I mentioned, that when you have some of these enabling elements in place, that's when it's really going to take off. Yasser, it'd be great to get your thoughts on this as well. Just to, the technologies are changing and evolving at such a rapid pace. How often should, what's the pace of upgrades that you're seeing? And how should financial institutions determine, whether you should build, whether you should, build in-house, or whether you should acquire a firm that's got these new technologies, or whether you just use off-the-shelf tools?
So I always believe in phased approaches for sure, because different organizations are in different stages of this AI adoption. So right now we are talking about this concept of frontier firm, being a frontier firm. I don't know if you heard this concept, being at the cutting edge of your industry as a company. Now, there are 3 phases to become a frontier firm. I think that could kind of give some glimpse of answer to your question. So in phase 1, we're talking about, in AI context, humans with assistants. In phase 2, we're talking about humans-led agents. Now, on the 3rd phase, this is where things get interesting. We're talking about human-led agents operated models. Now, if you don't have the skill set, the governance, the rules for AI at large, starting with phase 3 is a bit of a challenge. Not impossible, but a bit of a challenge. So what do we mean by those? I'll tie that to your last question, like, do we build it? Do we buy off the shelf? So in phase 1, humans with assistants, that's your, hey, AI, summarize what happened last week in all these online calls that I had. Rewrite this email for me. What were the key bullets in this document? This is humans with assistant. I think everybody is using that, right? But there are very interesting use cases in banking, like when you're a treasurer, a credit risk person, a trader. Obviously, the use cases get a little bit more advanced, but just for the sake of time, let's stick to the basics. In the 2nd phase, you talk about human-led agents. So imagine you have like an AI agent who is specialized in analyzing different industries in Africa, say an agent that is expert in agriculture. So you tell that agriculture AI agent, go and scan the market for all the literature about findings about the agricultural sector in Africa. So you actually guide the agent who is trained, who is modeled, who has actually improved over time to really understand what's happening in that specific sector. And that becomes an agent, but you guide the agent with your questions. Now, the 3rd phase is where agents start running business processes. I mean, I work with one customer where they had issues with their SME banking credit lending. When somebody comes and says, hey, I need $1 million Bahraini, well, that's a lot, 100,000 Bahraini dinars. And then the relationship manager has to go run a due diligence on that customer, right? Are there any bad news about this? So that's like the social media piece. What is the credit rating? What is the internal credit risk? What is the collateral utilization? All that stuff. So what the agents do is like they evaluate all of these aspects and then start the decisioning process to help the relationship manager. Now, here is how you handle all of these technologically. Some of them you can just build on your own if it's very proprietary. Like the relationship aspect of lending in SME space, in corporate banking, is very human to human, especially in the Gulf region that I've been here for 2 decades now. So you might want to build your model, the process, using those tools internally, because every bank will be different. But where you think there's a cookie cutter approach that you like what other banks have done, as an example, and you can adopt it, why build it? Why waste time? Start implementing, fail, reiterate, and continue. There should always be a balance between two approaches. I wouldn't say one is better than the other.
That's amazing, and thank you for laying all of that out for us. And I think the degrees of automation increase the further we go down this road.
Absolutely.
And I do want to, therefore, it's, I think, a good segue to talk about governance. And I do want to spend the rest of the discussion on that because it's so important. Mohamed, can you give us your views on what governance models should look like when algorithms are making such consequential financial decisions?
Absolutely. I mean, we're seeing now AI models are an instrumental part of decision making to give out, for example, loans or for fraud detection. So governance has to be at the forefront, basically. And a simple framework would be, I'll mention maybe a few points, but transparent decision process is extremely important. It's not just about why the decision was made, only why the decision was made, but exactly going through the process of making that decision.
Sorry, can I ask, is that transparency internally with processes, but also with customers?
So internally more important because you still need to guide and shape the decision making, but with customers, depending on the case. I wouldn't generalize it that way.
Sure.
And the second is also having an ethics or a committee also for governance. It shouldn't be driven by data scientists only. There has to be cross-functional partnerships between different departments or units, from compliance to risk to marketing. It's not just purely about math. It's also about morality. And there has to also be continuous monitoring and auditing. These AI models live on data. The data changes, and eventually there's potential for bias. So human intervention is extremely important to be able to step in when there is a need. So that's basically in high level, basically what governance should be like when AI algorithms are making these fundamental decisions.
Absolutely, and I've definitely heard some of these points, and I think it's emerging really as best practice on this front. But Gabriella, I want you to tell us a little bit more about the power of standards. All of this, you need everyone to adhere to the same rules if you're going to have, if you want this to work and if you want to consider it best practice. What is the power of standards in AI and finance? And I think, more importantly, as you're working towards the standards, how do you get consensus?
So when we talk about the power of standards, it's really in the ability to create a pathway for growth, to pull global actors, both public and private sector, around the table, to create a shared understanding that allows for interoperability, that allows for data transmission. I believe that when we look at what's happening with AI, every country all at once is grappling with how to regulate this. Both ministries as well as large corporates, small and medium firms. How do you stay ahead? How do you retain your edge? And I think that one of the core pieces of this, many times we seek to do our own research or to try to think that we're the only one going through this process. And international standards many times will align with sort of best practice when we look at global best practice for legal and regulatory approaches. It also gives firms that may be wondering how can they create those internal governance guardrails, sort of a blueprint for how they may be able to step forward. So One of the ways that I always say is that standards have been created to be globally applicable. So they should be able to be applied in each and every country. And, within the past 10 years, standard setters have really taken very active approaches to ensure that those standards are applicable both for large corporates as well as for small and medium enterprises. And so that allows for greater harmonization within a given country's economy and then both regionally and globally. So the power of standards is really almost the ability to tell the future, to give you that pathway to ensure that you're put on a trajectory for growth and leadership. When I think about, the best practices for use, both at a national level and then also at an individual corporate level, I often think about it from a standpoint of creating a steering committee or a group of representatives from given departments so that you have a holistic view. And you could look more at like a macro level, even at a national example, which is to ensure that different ministries, regulators, and central banks are included in that process. And then to create a roadmap for how you and your firm or you and your country are going to kind of take active steps to ensure that you're aligned with those global standards, that you are including all key stakeholder groups, and that ultimately growth and development is shared.
Absolutely. I do have a quick follow-up. Is there a current point of contention, a sticking point where in this context of AI, maybe in financial services, that we can't get agreement or consensus on?
So I'm kind of an eternal optimist. And I also believe that, generally speaking, when we talk about standards and the need to build consensus, that process of having international forum, whether it's, at the UN or if it is at, ISO or other bodies that seek to try to create a global approach, there will always be points of contention. It is the goodwill and, honest brokerage perspective of the representatives that come to the table that allow us to work through that. And so compromises are made in the development of standards, but, by and large, those compromises are what allows them to be globally applicable and accessible to all.
Fantastic. Yasser, could you build on that in terms of trust in the system? How do you ensure that there is trust in the system?
So trust is one of the most researched academic topic in AI. Trust and ethics, which are like subcategories of governance at large, I think. So I'll talk about 3 examples. I hope I don't forget one of them, to share with you the complexity of this topic with some tangible examples. Now, there's one research which says that when an AI agent or AI makes a mistake in something, the trust of humans towards AI erodes much faster than the trust against a human. What could that be? Let's take about the healthcare industry. You have a doctor and you have an AI doctor doing a diagnosis. If AI does the same mistake human makes, what has been researched is that the patient's trust towards AI it basically tanks. So now how do you sort this out? How do you apply AI when there is this problem to different use cases? The second one is in the interview process, there is this concept of devil you may know trust issue. So what has been researched is that when people are being interviewed by a human versus an AI agent, people actually preferred humans, although there could be favoritism, subjectivity, bias, because we are all human. The humans still preferred a human person interviewing them because a human is the devil I know about. AI is a devil I don't know much about. So it's stemming from that deep philosophical trust issues. How do you solve that? The third one is a very interesting research. I think it was done in China, and the research population was banks, call center agents, IT companies, call center agents, like 180 people, and financial services institutions, relationship managers. What they found out that because in China, and if there's anybody from China, please correct me if I'm wrong, and maybe even in Middle East as well, right? Because there is this concept of losing face. When people were exposed to a performance review with their managers, because of losing face kind of negativity, people actually preferred an AI feedback on a private basis rather than their manager giving them the feedback. And guess what happened in the end? These people's performances moved up much more than the people who was in the testing group that was given the same feedback, exactly the same script by a human. Now, you can play with this trust concept in AI in two different ways. One could be a doomsday scenario, AI, or I can't trust, I don't know what's happening, etc., which is fair. But then there is the other side of the story, which is like extremely positive. So, I mean, my recommendation in general when I talk to my customers is to really go under the hood to look at trust from those perspectives, because it's so difficult to kind of extrapolate this concept across the world, across all industries and all cultures.
Yeah, sure. And I think that builds on what Mohamed said about transparency as well and understanding what's under the
Absolutely.
hood. Gabriella, you know, where often this region is perceived as a follower, where you say, oh, international standards are set elsewhere and we adopt. But how can the Gulf region contribute and help shape some international norms in this space?
Sure, of course. I'm just going to pull a quick quote from our cultural tour yesterday, where they mentioned very heavily how Bahrain was often at the forefront and, you know, at the head of leading on key issue areas. So whether it was Formula One or it was innovations in some of the emerging industries, you know, so I will perhaps disagree slightly with the Gulf being a follower.
Of course. See, I set that up for you.
What I will say is that now more than ever, there is ample opportunity for participation in international standard setting. And especially when we talk about emerging industries, these are equalizers in many cases, because you have firms in this country, in this region, that are leading globally. And so their voices perhaps are more relevant or have greater expertise and experience. So it's from that, you know, encouraging, as I'm here today speaking with you, both representatives from the Bahraini government as well as from Gulf countries to actively participate through their national standard setters through ISO. And this gives them the opportunity to influence and shape standards so that, you know, the only way we get globally applicable standards that are practically adopted and implemented down at a national level is to ensure that those voices are included in the conversations around the table when we seek to ensure that they're representative and able to be successfully adopted and implemented.
Wonderful. I'm glad you're at the table here with us, and we hope we have representatives from the governments here are at the table where you are as well. So thank you so much for that. Mohamed, I'd like your thoughts on this as well, about the role that the Gulf can play in shaping international norms.
Yeah, absolutely. I think we're perceived as consumers of the technology, but we're seeing a completely different shift. The example of this forum, this event here, and inviting people like Gabriella is an excellent example of how the Gulf region is not only consuming the technology, but also participating potentially into the governance framework globally. And the Gulf itself is uniquely positioned. I mean, we strategically sit between the East and the West. There's heavy investments also within government basically frameworks. We've got an AI university in UAE, for example. So we're not, I agree with Gabriella, we have an excellent opportunity to participate into the global framework for AI. And these forums like the one that we're here are excellent examples of that.
Wonderful, thank you. And maybe we've just got a few minutes left, and this might be a nice closing session for the panel. Yasser, as we think about frameworks, technology is evolving so rapidly that we want the frameworks that are set up today to be future-proof, to be ready for not just the next evolution of AI, not in the next iteration of AI, but also other future technologies like quantum, right? You don't want to keep changing the governance framework every time there's a new technology on the scene. How should businesses think about keeping those governance frameworks agile and up to date?
That's a tough question, but I think from what I've seen on the field happening is all about collaboration. I think we touched upon that a lot. I see a deeper engagement between central banks, especially the supervision, their cybersecurity teams, the bank's office of the chief of information security officer, technology providers, including companies like us, the hyperscalers, ISO-like standardization organization. In banking, we have Banking Industry Architecture Network, BIAN. Everybody has a perspective that is so valuable. And I think for the first time, this is becoming even more collaborative. I'm not saying it wasn't. Always policies are discussed among different institutions, organizations. But with the pace of innovation, there is even a more compelling reasons for organizations to come together, not to block each other necessarily, and like what we have seen in Bahrain with the government, central bank, etc., but in the spirit of how do we create value out of all these technologies. So it is definitely not a one person, one body show. It's more about collaboration. I think that should go on more and more. And standardization is absolutely very important. So yeah, I think that would be my assessment of the.
Wonderful. I think that's an excellent point to close on. Thank you so much for your valuable insights on creating value using AI, but also ensuring that we have the right governance frameworks in place. Please join me in thanking our panelists.